Right. Good morning, everyone. Hi, I'm Dan, CTO of Comply First, and today I'm moderating the webinar. Fiona is going to run through 4 major EU tax and payments reporting changes hitting this year, with a focus on providing a snapshot of each report, so you know what's changing and what to do next. This webinar will last approximately 30 minutes, and we're going to cover 4 new reporting requirements. Firstly, the Spanish tax reporting of Modelo 196 and 170, the Instant Payments Report, CRS2 reporting, and DAC 8. We'll spend about 5 minutes on each and have a quick Q&A at the end. Next week, we're also hosting a UK webinar at the same time. So if you have a UK license, you can see the equivalent of what's coming down the track for the UK. So please register and join us. We'll send out the link after the call. In the meantime, please drop any questions in the chat and we'll answer them at the end of the call. Now, I'd like to hand over to Fiona, our CEO. She brings over 12 years of compliance experience from Goldman, Citi, and fintechs. She's a barrister in England and Wales, a certified AML specialist, and now solely focused on keeping up to date with new reporting requirements and helping our clients translate them and report them. There's no one better to walk you through this session. So over to you, Fiona.
Yeah, great. Thank you so much, Dan. Before we start, I want to quickly flag what we'll be covering in this 30-minute snapshot session. So our goal, we have 3 goals. First up, we want to help you understand the scope of each of the 4 new reporting requirements. 2, we want to clarify the data inputs needed to report. And 3, outline the simple next steps that you need to take to get ready for submission. And that's it. And now, just for a quick view of what we have coming down the track for EU reporting teams this year, it's a pretty busy year. We have Spanish tax reporting 196 and 170 due at the end of next month. We have instant payment reporting due in April, and we have CRS2 and DAC 8. Those data collection requirements are live already from 1st of January this year, with reporting due in 2027 at various points depending on your EU member state. Now, before we get into each of those 4, I just want to run a quick poll to take the temperature of the room and see how you're all feeling about these reports and which you're most unsure of. So we're going to do a quick poll and vote now. Okay, results are coming in. Okay, great. So that is polling done. So the top most uncertain report are the Spanish tax models 170 and 196, which is great because that's exactly where we're starting. So let's kick off with that. So just back to our slides. Perfect. So the first thing you need to know with the Spanish tax reporting models 170 and 196 is that this is not another set of classic tax reporting. Instead, it's a monthly declaration on accounts and wallets, which is 196, and cards and mobile payments, which is 170. And with both of these returns, the compliance team will probably need to help out. So what's it all about? Well, last year, Spain issued a royal decree which amends the RGAT, which are their tax regulations, and the objective is to close gaps in information created by modern payment models. And the whole mission is that tax authorities can be better informed and better detect undeclared income and tax fraud. And I guess the best way to think about these 2 reports in terms of the data that you collect and report is Model 196 is really about containers of money. So think accounts and wallets. And Model 170 is about movement of money. So cards and mobile payments. And I guess now for the big question, are you in scope? Well, banks, PIs and EMIs are firmly in scope, including branches and firms passporting into Spain. The key question is nexus, and that nexus is, do you have customers with Spanish tax residency or permanent establishment under 196, or do you have merchants connected to Spain for 170? If the answer is yes, and you provide those customers with accounts or wallets under 196 or card or mobile payment services under 170, then you'll need to report. And so here's how you get this reporting done. It's an XML format, and the report must align with the AEAT's, which is the Spanish Tax Authority's schema. The report must be split into a maximum of 10,000 records per file before you submit it via their web services gateway. And the first submission, as we said, is due end of next month, end of February, with January's data. And from thereafter, it's monthly. So a couple of key considerations worth noting on these reports. For 196, December is an extra heavy filing month. So you've got to include year-end balances, average Q4 balances, and annual totals, in addition to the usual monthly reporting. And for 170, there used to be a threshold. Now there is not. All in-scope payments are reportable. So what do you need to report on? What are the key data fields? Here is a very quick summary. So for model 196, it's about accounts and wallets. So you'll need the account ID or reference, the type of account, open and close dates and balances. If you've got individual customers, you'll need their name and tax identification number, TIN for short. Or if you don't have that, their passport or ID, their residence and their date of birth. For corporates, it's entity name, TIN, or if you don't have that, their registration or ID, plus their ultimate beneficial owner details, and you'll need to provide the same data points for individuals for those UBOs. On model 170, you will need the payment type, so whether it was a card or mobile payment, dates, transaction counts, and total amounts. You'll also need to provide your merchant name and ID, their TIN or registration or ID if you don't have it, and the settlement account or IBAN. And lastly, you'll need to provide the channel. So if it's a point of sale or terminal ID, add those as applicable, and the payment instrument reference, so the card or payment ID. So what are the next steps that you need to take to get ready for end of next month? Well, if you haven't already, I suggest you add a Spain reportable tag in your customer records, and you'll use that to drive your extracts each month for this report. You'll also, you would also be wise to cross-check customer tax residency on things like TINs and addresses versus the KYC info you hold on file for those customers, certainly as you go forward. And lastly, you need to get submission ready ASAP. So that really involves selecting a vendor quite soon to generate, validate, and batch these files to the 10,000 limit for you, and then submit those XMLs for you every month. And just to bear in mind, one last thing on this set of returns, not all data fields are mandatory. And if you need help figuring out which are and which aren't, drop me an email, fiona@complyfirst.co, and we will share our template for you so you can clearly figure that out. So that is very quickly a snapshot of the Spanish reporting. And now we're going to hop on to the instant payment reports, which is also coming around very quickly and due 9th of April. So the legal basis for the instant payment reporting is here. And the whole objective is to give regulators a clear view of instant payment pricing and any sanctions related rejects or freezing of payments. And regulators will use this data to, in theory, benchmark you against your peers and challenge any discrepancies. So again, the big question, do you need to do this? And yes, quick spoiler, if you're a PSP and provide SEPA credit transfers and or SEPA instant credit transfers to your customers, the answer is yes. So the scope of this report covers PSPs in Euro member states. So for example, Ireland, where our currency is the euro, and it also covers PSPs in non-Euro member states. So for example, a Polish PSP providing Euro SEPA credit transfers. And bear in mind, if you're a PI or EMI, you're also in scope, even if your banking partner directly settles the credit transfer. If you're a customer facing and you control the pricing, you need to report. Now, how do you get this report done? Well, it's an XBRL, and the schema and the technical standards are set by the EBA, which some of you will be familiar with. The EBA set the DORA standards earlier in 2025, so they can be a little bit complex. And ultimately, you'll need to submit this return to your national competent authority. A couple of, one really interesting consideration to note on this return is the unique retrospective component. So initially, you'll need to submit 4 reports covering 2022 to 2025. Then it's annually thereafter. A couple of things to watch out for. If you're reporting totals for transfers and accounts, try and align that data with common data points in some of your other returns, so perhaps payment statistics. And in terms of the data fields needed that you need to report, if you're a Euro member state firm, so our Irish example earlier, there are 4 core templates that you need to report on. First up is volumes. So you'll need the volumes of your SEPA credit transfers and your instant ones by sent and received. You'll need transaction counts totals and then split that national versus cross-border. You'll also need the charges, the fees charged for separate credit transfers and SEPA instant, sent and received, and split national versus cross-border. And on accounts, you'll need the total number of payment accounts and total account charges, including any maintenance fees. And lastly, sanctions. You'll need the number and percentage of credit transfers rejected or frozen due to sanctions, and again, split those national versus cross-border. And then just a quick note, these templates are linked on things like totals and splits, so those should reconcile. So what are your next steps to get ready for the instant payment reporting, if that applies to you? Well, you'll need to map and assign ownership. So if you have a couple of licensed entities or even branches, you'll need to ensure that your licensed entities know that they have to report to their home regulator and your branches report to their host regulator. Make sure, obviously, that you can extract the required rejected or frozen sanction statuses for other fail reasons. And remember, you have a couple of years of data to get ready, so start early. Now, guys, very quickly on to Common Standard Reporting 2. So CRS 2 is a report whose requirements apply from 1st of January this year. So 2026 is the data collection year, but you'll be reporting at some point in 2027. So CRS2 was implemented in the EU via DAC2 and updated via DAC8. And the whole point of this report is to expand tax transparency by ensuring that financial institutions report relevant financial accounts and tax residency on those account holders. So this used to be a bank only style report, but e-money and digital products are now newly in scope. And therefore, if you're a PI or EMI that provide these products, you'll also be in scope for this type of reporting. So what's this return all about? Well, it's an annual return where you need to capture and validate customer tax residency at onboarding, monitor for any changes in circumstance that might trigger you to ask the customer about their tax residency or perhaps refresh it, and then file the reportable account data each year to your local tax authority. So that's what you need to do. And again, now the question, are you in scope? Well, banks, PIs and EMIs are in scope if the product meets the CRS financial accounts test. So in practice, that means if customers can hold stored value like an account, then you should probably treat it as in scope for CRS. So and the other thing to mention is this is not EU specific. Your account holders can be anywhere in the world and you'll need to report on them, or sorry, tax resident anywhere in the world and you'll need to report on them, because CRS is a global automatic exchange of information standard. So for example, if you're an Irish EMI and you have a Canadian customer, you may report Canadian tax residency to the Irish tax authority, and then they'll handle the onward exchange in that example. So how do you submit this report? Well, you need to submit it in XML using the OECD schema and report to your local tax authority at some point in 2027. The exact deadlines will be set by each member state. And a couple of things to bear in mind and remember, 2026, as we said, is the data year. So that's when you need to collect the customer and account data in line with CRS. And you'll probably need to, if you haven't already, update your onboarding process to make sure that that happens. And 2027 is the reporting year. So that's where you report on all of the data collected in 2026. And in terms of data fields needed, it's accounts, so account ID or reference, the product type, the open and close dates, balances, and any reportable income, if that's applicable. For individual customers, you'll need names, addresses, date of birth, tax self-certificates, all their tax residences and TINs, so tax identification numbers per country, or if those are unavailable, a reason why not. For corporates, it's entity names, addresses, tax self-certificates, and the entity's classification under CRS, plus any controlling persons, and you'll need to collect the data from them, as we've just described, for individuals. And in terms of next steps for getting ready for this set of reporting, so I guess it's wise to confirm scope. So do you think your accounts or wallets that you're providing permit customers to store value? If yes, you probably want to report. Step 2 is to fix onboarding. So to ensure you can capture all of the data we just discussed. And lastly, step 3, set up ongoing monitoring. So you'll need to periodically check tax data versus KYC and track any changes in circumstances that might prompt you to recheck the customer's tax information and refresh it. So regulators will expect you to have these sort of triggers built. So look for things like change in address or a signal of a new country to help support your ongoing monitoring. And that is a very quick snapshot of CRS2 and how to get ready for it. Now, on to our last snapshot of the session, which is the EU DAC 8. And this is a crypto-based return involving EU tax residents. Similar to some of the other reports we've just discussed, the whole point of it is to give EU tax authorities greater visibility into crypto activity to enable stronger tax compliance. So that's the main aim here. And again, this one is an annual return. It requires crypto platforms to identify reportable EU users, apply tax checks, so residency and TIN checks, and report crypto transactions and holdings. So again, like CRS, this is live. The data needs to be collected from the 1st of January this year, and then it'll need to be submitted in XML at some point in 2027, depending on your member states' timelines. And scope-wise, it affects any reporting crypto asset service provider, so including MiCA authorized CASPs and non-MiCA or non-EU operators where they have EU tax residents. And the key nexus here is EU tax resident users. So reporting is triggered by them, not where the crypto platform is headquartered or based. And the crypto activity to be reported here is broad. Most types of crypto activity are reportable, with the exception of retail payments for goods or services under $50,000, in which case those don't need to be reported. So it's fairly broad. And in terms of some of the key considerations here, so I know we have various PIs and EMIs on the call. So naturally, if you have a crypto license or registration in addition to your PI or EMI license, you'll be in scope for this, or potentially if you have a contract with a group crypto entity and you're involved in servicing clients, potentially look at that as well. That may pull you into scope. And for any non-EU firms on the call, you should register in an EU member state for DAC 8 reporting purposes and to be able to get that done. So in terms of the types of data you need for this return, it's around accounts and wallets. So for instance, you'll need the account ID or reference, the wallet address or ID, and the reportable crypto activity against it. Again, similarly for individuals, you'll need names, addresses, dates of birth, all of their EU tax residences, a TIN per country or a valid reason code. Why, if you don't have that, why not? And for corporates, it's entity name, address, tax residence, and their TINs plus controlling persons. And those are the same field as above that we've just discussed for individuals. Lastly, for transactions, you'll need the crypto asset type, the transaction category, which is shown on screen on the slides, and annual totals. So with the next steps for this report, with some of the other reports, it is key to fix onboarding now if you haven't already done so. So you can capture all of that EU tax residence data that we've just discussed, or missing reason codes from day one. It's also important to correctly tag your EU customers in your CRM or database to drive these reporting extracts and ensure you're reporting the right users. So again, it's based on EU tax residency, not nationality. So just be careful on that one. And it's really important to tag transactions as well. So to ensure that the transaction tags attached to each and every crypto event, and that those totals can be extracted reliably. So with that, guys, that is our 4 snapshots done. And in terms of how you get these reports generated and submitted, if you need help, we can help you. We're a little different to some of the traditional vendors out there that are a simple Excel to XML or XBRL converter. We're a SaaS platform, so we can help you get rid of manual data entry on these reports, show you built-in regulator guidance, and validate in real time. You can also DM us on Slack or Teams, and we can get on a call with you one-on-one to support you even on deadline day. And lastly, we're in tons of jurisdictions at this point. So you can have a single view of all of your reports in one platform, and your tech team don't need to interpret schemas and build these reports from scratch. And just a very quick offer from us to help you with your 2026 reporting roadmap. We're offering to help you generate and submit your first report on us at absolutely no cost. So if that sounds interesting, pop myself or Dan an email, or indeed, if you have any questions and you want to go into more detail on any of these reports or snapshots, just drop us an email as well. And I think I'm going to hand over to you, Dan, for some Q&A.
Thanks, Fiona. That was really insightful. Just so that everyone knows, we'll be sharing the slides afterwards, because I know there's a lot of information in each slide, so you can dive into some of that information afterwards as well. So before we dive into the Q&A, we're just going to run another quick little poll. It's not mandatory, but it's only just to help if any of you would like us to reach out to discuss any of these reports, please let us know. So we will just wait a few seconds for that and then dive in to some of the questions.
Okay.
But we will end the voting.
I see a question there from Rebecca. Are non-EU crypto firms in scope for DAC 8? And the answer is yes, if they have EU tax resident users that they support. So it's not to do with the location of the crypto firm, it's to do with the EU tax residency of their users. So just bear that one in mind.
We also have a question from Brian on the upcoming filing. I believe this is for the instant payments report. We'll have to just double check that, but from the legislation, I remember reading, I've just brought it up here as well, says the PSP shall submit reports every 12 months, and the first report shall be submitted on the 9th of April, and it shall include all information on the level of charges and rejections during the period starting on the 26th of October 2022 until the end of the preceding calendar year. And then it was going to be done annually thereafter. So we'll double check that one. I think some of the legislation might be slightly out of date, but we'll get back to you on that one as well, Brian.
So,
does anyone have any other questions?
and if questions don't come to you now, guys, or you prefer to ask them privately, obviously feel free to drop us an email as well. So a question there, what will regulators use the instant payment reporting data for? So regulators will use that to compare and contrast and benchmark firms to ensure that they're not charging or overcharging for SEPA instant credit transfers, that sanctions checks aren't unnecessarily holding up payments, because all of that speed of SEPA instant credit transfers is beneficial to consumers. So yeah, they'll use that data to benchmark and call out any sort of discrepancies with firms. Okay, great. Well, I think that is
us. So thank you very much, everyone, for taking your time and joining us here. We will be running a few more webinars later on this year, diving into some of these reports as well as we get closer to their relevant deadlines. Like I mentioned at the start of the call, we'll be running one on the UK reporting side of things. So if you have any UK colleagues that you'd like to forward the invite on, we'll be sharing that after today's call. We'll also be sharing the slides so that you can refer back to them. And if you have any questions that you'd like to ask us privately, feel free to email us, Dan or Fiona at Comply First, and we would be very happy to help you with any of your reporting requirements. Thank you very much, and have a lovely day.
Thank you, everyone. See you soon.